Hello there, baby dolls. I just had a lovely protein shake, and today we're going to speak about inequality, crypto, what's going on. Should we be turbo long? The answer is going to be yes. I am going to share wise words from a dude who role plays as a cat on the internet. Now, Mr. Kitty Cat is actually a good friend of the channel as well. Mr. Kitty Cat, very wise, very good trader. He's a good speculator. I don't know if he's retired now, but he's pretty good. He looks at he looks at different spreads between exchanges, friends, and he tries to sniff out big buyers if you're just curious of how he scalps. Because I'm always curious, what's everyone's style? Now, Mr. Kitty Cat, friend of the channel, you've seen him. He's the yellow cat. All right, now I'm going to show you quickly. Mr. Kitty Cat is here. Mr. Kitty Cat, there you are. Mr. Kitty Cat, there's a lot of cool art and anime around him. It's actually awesome. Now, Mr. Kitty Cat wrote this article, and he's actually pretty bearish. I'm just going to warn you, okay? But Mr. Kitty Cat is a friend of the channel, friends. So I'm just going to tell you, we're still going to have some nice out-of-body experiences. That's exactly what's coming our way, because the charts, friends, the charts in Bitcoin, in crypto, in stonks, whatever story you're about to hear, the charts already said it. So you don't even need to know the story. Price moves first. And also, I've got to tell you something. Everything moves in cycles. Before big, great doom comes big, great euphoria. So keep that in the back of your minds, friends. Keep this in the back of your mind as well. We've had 12.8 years of up only in the stock market. The longest bull run in history. And these bull runs, whenever they happen, the bigger they are, the harder they fall when they go the other way. So, Mr. Kitty Cat here, what he's referring to, okay, I can show you this, all right, look at this. He goes, Cat had a long conversation with Snowden senpai. I actually think it's Edward Snowden. So I think actually Mr. Kitty Cat's talking to Mr. Edward Snowden, which is funny. It was like, Mr. Kitty Cat, all the way to Mr. Snowden, hey? So Kitty Cat spoke with Edward Snowden about this few months ago. So Mr. Kitty Cat is talking about the desperation of people and their inability to catch up to price purchasing power after being debased, okay? So Mr. Kitty Cat originally wrote an article. He's talking about, I see a lot of people continuing to speculate and do more degeneracy and more online casinos and these strong fundamental things that we all think are strong and fundamental. They're actually not capturing attention. Now, friends, I just want you to be careful because your friend Somi here has made a lot of videos to tell you the market is smarter than you and me. Because you see degeneracy and people giving attention to poop, doesn't mean necessarily everyone's stupid. The market is going to where their attention is. Why? Because we are in an attention economy. It's digital. We don't have geographic barriers. There's no buildings. There's no restrictions. There's no mountains we have to climb. We're all trying to fight each other for attention through the internet. Memes, pictures, stories, words, talking out, battles, Twitter spaces, YouTubes, live streams. Everyone's trying to throw out all this online digital stuff to try basically grab people internet style. Okay, so I can push back on that full degeneracy, but the truth is maybe it's a bit of both. All right, maybe it's a bit of both. So Mr. Kitty Cat, he originally wrote an article, and now he's replying to himself in the article. He goes, basically, I don't think this trend of degeneracy can be stopped. Meow. Desperation right now is a societal mega trend, unfortunately. But Kitty Cat thinks we are likely in the last 1 to 2 decades of a worsening inequality, and this ends violently in a big paradigm shift. Revolutions, losing trust in institutions, anti-rich movement. Meow, meow. All right, so Mr. Kitty Cat as well, he's written another lengthy post, right? That's what it was referring to when he's talking to Mr. Edward Snowden. And as well, he mentions too, he goes, look at this. He goes, Mr. Kitty Cat is talking about himself here in the third person, right? You got to get in on the jokes, friends. This is it. So Mr. Kitty Cat talks about himself in the third person. And I mean, it's a cat. So Mr. Kitty Cat said, I saw all of this coming and I wanted to quit crypto. Kitty Cat was very depressed, pre-depressed from the inevitable reality of societal-wide desperation and gambling. Edward Snowden then proceeded to explain to Cat in a League of Legends terms. He goes, we are unfortunately in a patch update to the current state, and speculation and gambling is overpowered items and builds right now. And the cat really hopes that is when it all ends. We can come together to fix the patch notes for the future generations. It's basically in a nutshell saying, hey, we're in a power structure shift right now. Where, you know, friends, yes, the rich and powerful, they have all the money and the power, but what they don't have is us giving a shit. We want degen crypto items, okay? That's what we want. Friends, for example, we didn't even buy the S&P 500. We bought a degen S&P 500 meme. We just made one, okay? We're just like, nah, I'll buy our S&P 500. It's one of the greatest, funniest things ever, okay? Now, Mr. Kitty Cat mentioned as well, you know, we can come together, fix up future generations, and that might give Kitty Cat some motivations to stay here. Meow. And I can then try Cat's best to do well and help to change notes in the future. Thank you, Edward Snowden. So it's basically saying, hey, we're in, you know, that interim period where shifting generations changing. The silent and the baby boomer generations are going to be dying off. And then us, crypto generation, we're going to be coming up because we all love crypto. We love interacting with it. Everything's digital. We don't like walking into like big old boring banks. I don't want to buy your Johnson & Johnson stock for 4%, bro. I want something that can triple in a month. Okay, that's what we're here for. Sure, I can lose everything, but that's what we want because we've basically got nothing anyway. That's everybody's real feeling out there. Now, I'm going to show you this chart. It's not even updated to 2020. It's 2010. This is income inequality in the United States. Now, friends, I'm just going to tell you something. What I'm about to tell you, Ray Dalio said it. Everybody who studied history knows it. I don't want to be a doomer. Just telling you, these things only reset with a big war. Sorry. I'm just telling you right now. The only way to reset this, and not my only, my friends, 11 out of 13 times. So they're the odds, basically. 11 out of 13 times or 10 out of 13. I mean, it's really, really high. You think about it. It's like an 80, 90% chance. The only way to reset this inequality is with a war. And traditionally what happens is, first, the euphoria ends. Power gets like wrecked. And then the power gets wrecked. And remember, power, friends, is a stock market and equities and ownership. They get wrecked. There's a contraction of the money supply. People get very feisty and angry. A lot of power people have lost a lot of power. And what happens around the world, there's a lot of debts that got to be paid, and there's more turmoil there because rich people are getting more on the way down. And guess what happens? In the rich people, powerful people losing power, people rise for revolution. And then they're like, you know what? This system sucks. And because you have not only the poor people, but you know those rich people who were keeping the poor people poor? Well, those rich people, they lost heaps of equity value as well. So everybody's down only. And that's how, friends, I'm not making this up. Okay, I don't want to get banned, but I'm just, this is Germany, 1940. This is, you know, the dude with the mustache, right? That's exactly how it happens. And I'm going to show you. You can actually see it on the chart, right? You don't believe me. I know you don't believe me. I'm going to show you on the chart. You can see it right here. Look at income inequality. But I want to look at this. Look at this. Look what happened in the Great Depression. What come here? So the Great Depression comes first. So you have the roaring 20s. Look, the rich get richer all the way up here. And then there's a pop here. And look, there's a first big collapse from all the rich and powerful. There's a big down-only collapse. And then look what happens here. Now, you know what this collapse is, friends? This collapse is the poor and middle class making it back, getting more rich. Look at this. See that? This is in the US because the US obviously has won the war. Because they printed money, production was high. That's why. The inequality, so the difference between rich and poor wasn't as big anymore. All right, now, this all ties in. Now, I'm not saying we're going to have a war, but I mean, like, it just kind of feels, hey, man, like it starts with a trade war, okay, right? Maybe China and America, trading war. Then comes the currency war, which is scary because Donald Trump, remember, he was accusing China of cheating with the currency. By the way, China does cheat with the currency. Every single president has said it, even Barack Obama, okay? So first goes trade war, then currency war. And unfortunately, friends, they all eventually lead to the economic war and then finally the kinetic war. So economic war is literally where they go, hey, you know what? The trading and the stuff, forget it. It's literally full on. We're banning your stuff. We're not trading with you. It's finished. Okay, we're just closing all the accounts. That's the economic war. And then that leads to kinetic war. Kinetic means energy, friends. That's the unfortunate bombs and stuff and everybody going wow to each other. So this is where things seem to be going. I hope they're not. I hope they're not. I don't know. I hope they're not. But let me continue and just to show you this right now. So how do we, okay, look, where are we in history? We're moving along. The stock market's overextended. There's been a big inequality gap, and we know something's going to like break. Okay? Because friends, the system only works as long as poor and middle class think they can still make it. You know that, right? That literally, systems only work in any society as long as you can keep dreaming of like, oh, I can 100x my net worth. It's true. Think about it. It's the only way you can keep it going. You need people to believe it's possible. You need people to think that the system's not rigged. When there's too many poor people, everyone's like, you know what? Revolution. We're out. We screw this system. Screw it. That's why I think that makes sense, right? Great Reset, all the media type of manipulation, brainwashing, all of this stuff, the shadow banning on Twitter. It makes sense, right? They're like, oh, okay, yeah, they're just trying to make sure the poor people don't revolt. Yes. That's why they call it misinformation. We don't want you to spread misinformation. They're scared. They're scared. They made too much of it sport. So Mr. Kitty Cat, right, he shared his thoughts about this degeneracy. And as I explained, okay, so inflation has ridden everybody of their purchasing power and it forces most people to become hyper speculators. That's what we're seeing in crypto, everyone coming in. But remember, don't get it fooled, friends. We're also trading attention and Metcalfe's law. It's just that, look, you can have that pessimistic view, but I've also shown this with you, put some light on it. Thank you for liking and subscribing, friends. Keep your posture straight, please. I've shown you that, look, because we don't have gripping applications yet, like really gripping and super polished, people are just moving around everywhere. It's just like, it's people moving from like, let's say that you're in a city and there's like different suburbs and neighborhoods and everyone's just moving around. But then eventually one suburb makes like a killer restaurant. And then like a really rich school opens and then like a super cool hospital opens. And you're like, oh, that's the suburb I want to live around, right? You see what I mean? We don't have those yet. We've got the basics. We've got like Bitcoin, store of value, Ethereum layer 1 chain. We've got Uniswap V2, which is the DEX, right? You have PulseX. You have other different chains, like doing the same thing. You're also trying maybe the GMX perps, but that's gambling. But you get the point. We need to get like the non-financial gaming, the non-financial, degens in. All right. So right now everybody's desperate, and the desperation is going to continue until there's an enormous catastrophic blow at some point. Now, that's what, friends, the US Fed knows this. I'm not making this up. They all know this. They know that when they slow the business cycle, there are businesses who are over leveraged. And what they're trying to do, friends, instead of getting that big fat capitulation, they're just trying to staircase it down. They're trying to control the business cycle. Very tough, but because there's always insiders. All right. Now, this is for me. The reset that we hope is avoided by all of us trying to navigate this time right now. So that's what there's going to be a reset somewhere. We're hoping that this is the final exit pump. If it's not, well, you lose anybody. Anyway, what are you going to do? Oh, I'll just keep saving my money. Okay, guess what? In the crisis, they're going to print and inflation's going to get worse and or you're going to lose your job anyway. So you may as well try to swing for the fences now. Now, your friend told me, my own feelings is that the stock market is in complacency rally, which is the final pump after 13 years of up only. And if you watch all of my videos, I've shown you the extension of the stock market. It's like going on for 12.8 years, friends. Everybody knows, you look at the chart of the stock markets. If you have like 10-ish good years, there's always some trashy sideways years. It's just the market's got to consolidate, catch up to valuations and everything, okay? Now, the Fed also banned themselves from owning stocks in October 2021. The literal top, friends. I mean, how can you even make this up? Like right here, after 13 years of up only, this whole way, 13 years of up only, the Fed goes, you know what? Look at that. This literally, how rigged is this? 13 years of up only, the Fed goes, hey, you know what? We want to ban ourselves from owning stocks right here. This whole way. And look where they go. Righty, we want to ban ourselves. Oh, we need a reason. It could have been a planted story for all we know. Do you really believe it? And by the way, they have an enormous amount of money in stocks. They're looking after their own friends and family. Okay, then millions and millions and millions, hundreds of millions of dollars. They all get to dump. It's fishy. And I also mentioned as well, the last ones left though is the U.S. Congress, and they've already put in a bill to ban themselves. So wouldn't it be nuts if somewhere they ban themselves here and then, oh, golly gee, the market goes down and they can't print as aggressive. Imagine that happens. That's the scenario I'm talking about. That it's all lining up. I hope it doesn't happen, man, because I want us to go up only and win. So now, obviously, US Congress, they're about to ban themselves too. The anti-establishment rhetoric is going to continue. All right, our gap, it's going to stay wide. Of course, it's going to stay wide because they printed so much money. All right, now, the gap, friends, the gap happened 100 years ago. I showed you in the picture, right? I showed you in the picture. The gap happened 100 years ago, and you got to see how was it closed? It was World War II, right? So I don't know if this is going to happen again, but it's nuts. They can't. You know, the only way, I'm not joking, the only way for the gap to close is them to liquidate powerful people. That's it. That's it. And the only way for them to get liquidated is big fat stock market crash. So by the way, I don't know, they might not even get it. It might take a long time. Or there's another alternative. They make such great AI robot products that the lower and middle class increase GDP for a long time. But we'll see. We'll see. All right. Now, so many things going on, right? FDR also had to put in social welfare. So Franklin D. Roosevelt, one of the most popular, US presidents, he had to put it in during the Great Depression. Then they went to World War II. So obviously the most important point of all, friends, how can we actually apply this to crypto? Well, you're already here. So you're winning already. You know how to use MetaMask. You know how to do clicky swap buttons. You know what to do. Hopefully you just turbo long on spot coins. So yeah, everybody whinges. Oh, it's going to be my coin. What's going on with the Pulse chains? What's going on with the chain link? You're not moving like the other coins, Solana. Yeah, man. I mean, you're ahead of the game anyway. Like what we're doing is, friends, there's a couple of million people winning, 300 million people not winning. You know what I mean? It's just, we're beating everybody else though. It's unfortunate that's what it is, okay? Because it's a race to dump the fiat first and get scarce assets. So you just got to remember, when the euphoria arrives, you just always got to think, hey, there is a reset coming. I mean, it could be right now, by the way. We literally, the stock market is in super extended levels right now. I'm not even making this up. You've seen this, man. Look at this. This is a Fibonacci, right, drawn from the top of the GFC to the bottom. And then you go to where we are now, and we are literally at the 4.326. And whenever this happens, there's always a big reset. So here's the thing. My friend asked me as well, hey, but we stopped around here, and then here, and then here. All right, we stopped along the way. Yeah, friends. But look at this. Okay, this is the first one, 1.16. Here, there was no unemployment rate recession. Okay, so no recession here, no recession here, no recession here. And then we made it all the way to the top, which means, just saying, historically, if you skip a recession at every single extension, when it comes, it's rough. You know your nipples, friends, with the hot candle wax? Yeah, both your nipples gone. You're going to be fried. They're going to be spanking you. Probably blood's going to come out from them spanking you so hard. It's just what history says. And like I said, you get a 13-year up-only bull market. That's what happens. It just so happens that had 3 crypto cycles in there. I don't know what the future holds, but man, that sucks. Like, and I've also explained to you, right? So we need I hate saying this term, but I mean, the Fed said it themselves. We need a reset. They told the property boomers and copers in March to June of 2022, they said, yeah, you guys need a bit of a reset. No one was looking because they're in complacency mode. Just the real estate sector takes so long to like process these things, right? Because no one believes it. Because real estate has been up only and ticks up, right, every year. Now, we know Roca Negra is a Trojan horse. We know the Bitcoin spot ETF is fake. As your friend here was trying to warn you and tell you, whilst telling you to get long anyway, because once everybody figures it out, they're going to realize they're underexposed because they didn't make as much as they should have, okay? So, knowing all of these, yes, we're in the then they fight you phase. Because they know, friends, by the way, they know eventually a recession's coming and they're going to have to print money. And look, I don't want to give them any credit, but they're doing their job. Their job is keep everybody subdued and shut up and keep everybody working in the rat race. That's their job, which means, translation, keep the fiat system running. Don't let any fiat escape out the gates to the land of freedom, like Bitcoin, real DeFi, Pulse Chain, PulseX, Hex, even bug-eated DeFi, any crypto. Just get them away from Bitcoin and Ethereum. That's what they want. Just don't go there. Because if people get to see that, then they'll realize, oh my gosh, look what's really going on. And they're too scared of that ever happening. Of course they are, because they want to maintain power. So we know all of this is coming, but we just don't know. Hey, I know you like coming for the show. It could be 10 years, could be 20 years. We could be doing it right now. We could be literally at the tippity top of this extension. It could be like a super hard, aggressive recession coming, or a slow burn one where it's like a double recession. That's another possibility. That's why I'm telling you, fans, like, it's a George Soros playbook. I see this, and I'm like, you know what? You got to take a page out of his book where he's like, look, when I see a bubble, I jump in to get long. That's not rational. Markets aren't rational. Explain that. So I've translated that for you, right? The charts say it. The story says it. Roca Negra and the fake Bitcoin spot ETF says it. Uncle Petey Schiff, shout out to Uncle Petey Schiff, watches this show. Uncle Petey Schiff is using Bitcoin ordinals for Bitcoin. All right. Uncle Petey Schiff heard about Bitcoin literally like $4, man. He's using it now. It's laggards and skeptics. The government signing in the ETF is laggards and skeptics. We can see all of that. It just so happens we can also see the story forming behind it. Doesn't really matter. I mean, you know what to do, friends. You get long, you get strong, you drink beer, you shag your wife, and you'll be all right. Tell mom and dad we're still going to make it. Screw everybody. To the moon, baby. Catch you soon.